Let's welcome on board Chakri Lokapriya, who's the head of India and ASEAN Equities and fund manager at Copthall Partners. He's joining in from Chennai. Mr. Lokapriya, good evening. Many thanks for taking time out for us here on Market Hour. I want to begin by talking about the carnage that we saw on the Lal Street. You know, what do you think the reason behind it is? Many believe that the budget was long on intent, but perhaps short on specifics. Is that a fair assessment, or should we be cutting the FM some slack?
Hi, good evening. Yes, we went into this whole budget session with a slew of expectations, and so it was a budget which was delivered, which was high on vision but low on details, and maybe reasonably so. It's been a government in power for about a few weeks now, and they have to clear the road logjam created by the previous government. So I think, and plus leverage positions got sold out today. So, but I think the overall direction is up, and so budget blues and markets have always fallen most of the time. So I wouldn't read too much into it.
In fact, that point even gets some more weight, that market started correcting 2 days ahead of the budget. Probably we are already so much into the money, as some would say, and some money needed to be off the table. How much would you, assign probability of, say, Nifty testing 7,000 odd levels, given the environment, given the global cues also turning slightly wobbly now?
I think we are trading on future expectations rather than current earnings growth for FY14 or 15. And while we went into the railway budget, which was also a good vision document, but also lacked some detail. And I think what followed was the budget after. And so I think in the current environment, I think the global cues will to an extent dictate, but at the end of the day, the earnings season is kicking off. And I think what the Indian corporates have to say about where they see demand going into the next few quarters will be more important than the earnings itself. So from that perspective, yes, the market might head lower. Mind you, it's up, the mid-cap index is up 30% year to date, and even after this 10% correction. Nifty is still up 18% year to date after the correction. So I think the overall direction is up, and the focus should be on what managements expect going forward rather than current earnings.
Right. Since you are talking about cues that will guide us from here on, you mentioned earnings. There's also IIP data that came out today. I want you to, touch upon both for us. What did you make of Infosys's earnings, and what are you expecting from the rest over the next couple of weeks? Also, a quick mention of IIP, where clearly we are seeing signs of some sort of a turnaround.
Yes, I think they're all good points in terms of three different sectors. IIP on one hand reflects a turning of sentiment, and sentiment is a very powerful thing in markets. We've seen that consumer goods sector has turned up, and now with the tax cuts that have been given in the budget and going into the festive season, we'll probably see a reviving up of consumer sentiment. Second, in terms of sectors like mining, which have seen some Supreme Court, some easing of mining restrictions in the last few weeks, which will possibly lead to a positive sentiment in the coming weeks. Again, manufacturing. Manufacturing, the export component bit of the manufacturing will continue to be revised up. And the sentiment on the domestics will probably now move towards the positive. On the other hand, IT is purely dependent on what happens in the export markets in the US, which is growing, the economy is reviving. And Infosys is a slightly different animal because it's a company in transition, going to have a new CEO, but the other IT companies, I think, will show stronger growth than what Infosys did.
Mr. Lokapriya, you must have gone through the fine print of budget by now. Which are a couple of things, if you could highlight for us, and related sectors which overall market may have missed out looking for big headlines?
Look, at first blush, I think the market is apprehensive that whether a 4.1% fiscal deficit target can be met. yes, it does look fairly aggressive. But I think and there's also apprehension whether the economy can achieve an 18% increase in tax collections. And it's also probably, I would agree with that. But again, I think the government can exceed the 63,000 crores disinvestment target that it has set for itself. Look, from 2007 to now, the economy has doubled. The GDP is now 2 trillion. Earnings have doubled. FII allocations to India have increased. So I think there will be more than enough appetite to absorb the 63,000 crores of disinvestment, which will make up for any mess in tax collections. Second, if you look at, there has also been fear about whether infra companies can indeed start reviving. If you look at the pending projects, $80 billion worth of pending projects. So we expect about $20 billion worth of projects to be revived in the coming few months. And I think if that happens, it will create a positive news flow momentum, which is more than sufficient to continue to revive market sentiment.
All right. Let's talk about the fact that, everybody makes a case about how this sort of correction is a great buying opportunity. Do share with our viewers some stock ideas, both large as well as mid-cap, that you are betting on.
I think, the overall direction of the market is up. We still firmly believe that the market will double in 2 to 3 years from now. We're very happy with about a 60,000 Sensex target in about 3 years from now. So in that context, I think both large cap in industrials like L&T, amongst mid cap, you would have companies like road construction companies, IRB, IL&FS doing well. Cement as a sector will continue to do well because it will benefit from multiple streams, infra, housing pickup. Consumer demand will pick up. I think consumer durables demand, in other words. There's an additional income, 3% increase in disposable income in the hands of the consumer after the tax cuts. So for someone who's earning, let's say, 10 lakhs a year, that's an extra 20,000 rupees in his or her pocket. And so that would see to an increase in consumer durable increase. So I think companies like Godrej Consumer would benefit. And on the other hand, you have logistics companies, Gati, Concor. These would be strong beneficiaries. And banks who fund all these various activities, both mid caps like Union Banks and large caps like ICICI or Bank of Baroda, I think will all be strong beneficiaries over the next 3 years.
All right, Mr. Lokapriya, wonderful having you on the show. Thanks a lot for taking time out for us this evening.